Okay, welcome to the Bookmap platform details. The risk disclaimer. Trading equities and futures involves substantial risk of loss, is not suitable for all investors. Past performance is not indicative of future results. For more information, go to bookmap.com. If you are in trial or are a member, then you have access to a lot of free resources, and you can always reach out to us at support@bookmap.com. Let's see here. So I want to show you where you can find Bookmap. It's here. You might want to watch these intro videos here just to get a feel for what Bookmap is all about. And then let's click on the pricing tab. This is where you can find Bookmap, and this is where you can get your 14-day trial period. So subscribe here. There's two different versions, the basic and advanced, and the difference between the two are the add-ons and the ability to trade from the chart. Now there's also the basic and advanced here with DX feed. It's just a package with a data feed, and the data feed is only for US equities. It's not for futures. Okay, and you can get a trial of that as well. Now the trial is for delayed futures equities data. So if you're looking for live equities data, then you will have to purchase it, and it's $59 a month. Okay, you can get it with the basic and advanced as well. Okay, you don't have to get the package. All right. For more information on the latest on Bookmap, go to our Twitter account and you can follow us there, or you can subscribe as well to our YouTube page. And any videos that are uploaded, you can get an alert and know exactly when those are uploaded. All right. Okay. If you're new, then I would suggest starting with some of the features and components videos here. Maybe watch a couple of the order flow video snippets, but this is more of the kind of understanding how to use Bookmap within your trading. And we get more into this in the advanced analysis webinars. We also have an educational course here, and then the recorded webinars are here. Okay. All right. So let's jump in and take a look at Bookmap, and what are we looking at? Okay, let's take a look at the ES, and we can see the sell-off here in the ES. Just going to start off with the basics, okay? Because for some of the newer traders in here, we need to go through this, all right? And actually, I can see quite a few newer traders in here, and so welcome to the webinar. Let me show you what Bookmap is all about and what is it displaying here. Okay, so we're just going to go through this. We go through it every day. It's just a simple exercise. We're looking at here a 5-minute candlestick chart. Okay, and most of us are very familiar with the candlestick chart. Open, high, low, close of a 5-minute period. All right. That's all you get in that candlestick chart though. Okay, we do have a subchart here in volume that can be helpful, but the issue here is that we're making financial decisions based on open, high, low, close. That's the only 4 data points that we have. Okay, and that makes reading the buying pressure that you can see down here with the wicks, it makes it kind of nebulous. We really don't know where the volume is taking place, and that's a problem. Okay, we want to know where the volume and transactions took place, what type, was it aggressive buying or aggressive selling, and where it took place and how much. Okay, that is all missing from this chart, as well as understanding where traders are lining up to bid and offer. Okay, so let me start to turn on layers of data here, and I'm just going to start with the historical best bid and offer, and we're just going to zoom in. So the red line, okay, we have 2 lines here. Okay, the red line is the historical best offer, and the green is the historical best bid. Okay, so this wick here is this price action here. Pretty. Actually, this is not bad information on the wick, because we don't really have any sort of. It's a very quick move down and a quick move back up. Okay, now this is where we're starting to get some interesting data here that's really not in the candlestick chart, and that is this little sideways consolidation layer here. and then we get a retest of it here, and then we break to the upside. Okay, so you know, we're starting to understand what makes up this candlestick chart just with the historical best bid and offer. But if I turn on the volume, okay, now we have a complete picture of where the trading action is taking place. Okay, you can see the red dot here is an aggressive market sell order, and a green dot is an aggressive market buy. Now, it's displayed here in a pie display just to give you the overall feeling of the volume at this area, and the size obviously means a lot of volume. So let's just zoom into this area here, and you'll notice I'm going to click on the hand tool, hover over this, and you can just zoom in very, very quickly with your center mouse wheel. Okay, and as I zoom in here, I start to break apart that pie display into all the various elements in each specific event. In fact, I can continue to zoom in here and continue and break apart all of these trades, and I can see exactly what took place here. You know, we're down at millions of seconds at microsecond level here. Right? This is what unfolded. Right? And we can see that there's some mechanical algorithmic action here taking place in some of the trading, and that's how these markets trade. There is a lot of robots are trading back and forth. Okay, now as I zoom out, okay, note how all of these trades get visually and just visually consolidated or aggregated into a bigger dot, and that's how we'll display the volume. Okay, so you can see green dot here. This is an aggressive market buy order. Red dot is an aggressive market sell. That's how we define our volume. Okay, as I zoom out, and you can see that so many trades took place in here that we're giving you still the overall. So the majority of this move to the downside is the majority is selling. Okay, and a little bit of buying, and then here it's actually pretty flat. Okay, it's both buying and selling. Okay. Okay, so that is the traded volume. Now, that's good. And let's go back to the current market and take a look here. And you can see the 5-minute candlestick is forming in real time here. All right. So it's good to know where the transactions take place. However, and that is traditional tape reading. But the problem here is that we still don't know where traders lined up to buy and sell. And usually what we do for that is we go to the DOM, okay, and we look at the liquidity here. And we're looking at these price levels to see where traders are lining up to buy and sell in this marketplace. This is your level 2 data. Here's your depth of market on the offer and your depth on the bid. And right here is your inside level 1 data, your best bid and offer. Okay, it's reflected in this window right here as well. This the dashed green and red is your best bid and offer, and this number is the last traded volume. All right, so now it's good to note and have an idea where these high levels of liquidity are, where majority of the sellers and buyers are. Okay, we can see here at 57, pretty high liquidity, 1369 in 70 in terms of contracts there, and then you know, down here at 52 we see 1100 contracts. All right, so we have an idea where traders are lining up and providing liquidity, and that's helpful. Problem is with a DOM, and this is your DOM in Bookmap. The problem here is that we don't. Once these numbers change, and they're changing constantly, that information is lost. That previous information is lost. It's been updated, and we have no record of what this auction looked like previously. Okay, you'd have to remember it, and you'd have to remember the time, the liquidity, what about areas around it, and how long it stayed here. Okay, and you'd have to do the same thing here on the bid side. Now, what we do though in Bookmap is we give this liquidity a graphical representation in the heat map. Okay, so that high liquidity here is given this graphical representation. It's very bright. It means it's high liquidity. If it starts to get darker, darker shade of gray, you can see it's less liquidity. So these numbers line up to match the graphical representation and vice versa. Okay, so now we know. Now we know where that high liquidity is. And that's in the current market window. Okay, now you'll see them pulling liquidity, and you'll see the heat map will change to reflect that pulling of liquidity or adding of liquidity. Now where it gets interesting here is we take this data and we project it onto the chart. So now you can see the adding and pulling of liquidity within these striations here. Okay, it's on the chart historically. So now we understand where traders were lining up previously, how much in relationship to price as it's coming up toward them. And now we can start to gauge the intent of these traders. We can start to use this limit order book to our advantage. Okay, so let's zoom out a little bit and I'll show you what I mean. Okay, and you can see that the historical heat map starts to change a little bit based on all of the liquidity that's here in the book. Okay, so we can change the contrast configurations here and brighten it up a little bit. Play around with some of the black and white cutoff, and ask me questions here about some of this if you'd like to know some more details. But it's in the user manual, which you can find up here under help and then user guide. All right. But these webinars are for you guys to answer your questions that you have about the platform and get into some of the details here. Okay, so now we can start to gauge the intent of these traders here, and look how they pulled that liquidity at the last minute. Right? So did they really want to trade up here? And the answer is no. Okay, they pulled. Okay, 57 at 24.57, they stayed in the book for a bit. Okay, guys down here at the same moment, and probably the same player at 54 and 53 pulled, and that now you can see that shade of gray. It got a little darker here. Okay, so we are channeling now between areas of high liquidity around the closest here is 54, and then 50, 57 here. Okay, so a 3-point range, which is pretty narrow range in the S&P. I don't know, maybe kind of average 4-point range now, I guess. Something like that, 5-point range. I don't know. We see it change all the time. Anyway, that is something that you can now use to your advantage. Okay, you can start to gauge, if they stayed in the book, if they got filled in some of these areas, and the key here to understanding the liquidity is just like understanding the traded volume, okay, and your volume profiles. We're not looking at one single line of liquidity to give us insight. We're looking at overall context of an area, okay? If you just see one big volume dot here, it's helpful. It may have significance, but we want to know about kind of the buildup to that area and how it reacted afterwards. That's what gives us the context to that traded volume. Okay, and it's the same here with liquidity. We want to treat it that way. We want to understand the context of it. Okay, so for example, this guy here pulling is showing kind of bearish behavior because he doesn't really want to be a seller here, and it looks like maybe he's pulling and adding up here at 57.5 and maybe here at 57 as well. Right, so he's less aggressive. It's further away from the best bid and offer. All right, and we can read that context. Okay, but these guys at 57 so far are staying in the book. Right, now we will really know when price comes up and tests them. Okay, look at the aggression coming in now at 56. Okay, that just popped into the book. All right. And this will start to give us some insight here to the differences between shorter term high liquidity and longer term high liquidity. Okay, this just popped in. Okay, so and we can see how the auction here reacted immediately to it. And let's zoom in a little bit more. As soon as they popped in, we see price move down. Okay, it skewed the auction. Okay, this is similar to all of a sudden more supply jumps into the auction. Okay, if it's you know, you go to the farmer's market and then all of a sudden someone shows up with a truckload more of vegetables for sale. Okay, and here's another example right now. Okay, so now this we see this kind of activity all the time. Right now, this could be potential spoof. You know, what if they skew the book, and we can see, you know, high liquidity here. It skews the auction, and then what if they jump out? Okay, there will be a vacuum. Price can come right back up. Okay, or do they stay in here? Do they really mean business? Okay, do they say enough is enough? I want to be a seller here at these lower areas, and I'm going to get a deal here. In fact, now they're starting to chase. All right. Okay, so we can start to gauge the context of the auction and read the order flow here. Okay, and we'll be doing it the same way, using the same skills. Just it's going to be kind of a flip in your mindset, though, understanding liquidity compared to understanding the transactions and the volume. Okay, but it's the context that we're looking for. All right. So now you can see that candlestick chart is lacking quite a bit of understanding, quite a bit of data here, and Bookmap is showing us here a lot of transparency into the market, really where they're interested in trading and where they're actually transacting, and the type of the context of the auction, as well as the type or the context of the transactions. All right. Okay. Now we can start to put this all together into you know, understanding some very simple technical analysis. You could read your candle patterns into this as well. I don't have any sort of issue with the candles at all, as long as they're put into the right context. Right. So, you know, for example, we're trading now down below this these two candles here, or three candles, right? And if what I'm looking for then, okay, based on these candles, is I'm looking for the volume. Okay, I want to see more transactions take place down here. Okay, that's going to give me a lot of insight to my candlestick patterns. Okay, and then I'm also looking for the auction. What's it going to be telling me? Okay, well, these guys now, look at the interest here at lower levels here. Okay, you know, here at 55.5, and they were here earlier at 56, and they're still kind of showing up at 56. Okay, all right. So now I've got something. Looking for pullbacks. And you know, if you're looking at your candlestick pattern on your higher time frames, then now you've got the transparency into that candlestick. You can understand it, right? If you're looking for that, then you would be going short here. Okay, you'd be looking for selling on pullbacks. Okay, and now we have a lot more information to support that decision. Okay, so I hope that is helpful. You know, giving a reference and context to a bigger picture here. Now you can look at all sorts of things here. You know, you can start to draw your trend lines. You know, maybe you're looking for this range here to stick, but you know, here we have a trend line at 53. Okay, well, maybe there'll be buyers down here, and indeed there are. They're lining up at 53. Okay, so if you went short here, maybe you'd want to take some profit down at this area. Okay, if you remain longer term bearish, well, then maybe you'd want to let it run, and maybe you're looking for getting some more on up in this area. Okay, there's all sorts of ways to play this. Okay, but the market is being recorded, and all the data is here in front of us. All right, so we can also look at some horizontal lines here. Okay, I like both the trend lines and the horizontal lines quite a bit. Okay, here's our breakdown. Actually, the breakdown, we even have a microstructure up here, as we can see, okay, in this little area here, and we see the breakdown. Okay, we don't even get a retest back to that area. We get a retest back to, let me stop that so you can see my mouse. You can see the little swing to the low here, and that's where we basically get our retest here. Okay, so kind of back into that area. Okay, we don't even get back into this area up here where it broke from this little microstructure up here. But now we're starting to get a lot more context, and it gives us a lot more insight to this price action. Okay, because we have structures within structures here, and this is the fundamentals of starting to understand fractal market behavior. All right, so these moves start with the smaller moves, and then within a bigger move as well. Okay, so we got to pull back to the bigger move, but we didn't get it back to the smaller move up here. All right. Any questions? Okay, this kind of analysis here is what we start to get into well in about 4 or 5 minutes here into deeper analysis of what to look for in how to start to apply this to your trading, and that's in the advanced webinar. Okay, but this webinar here is about the platform and the details, going through some of the functionalities here. Okay, like there's drawing tools, right? And you can clear them all off here as well. There we go. Jumping back and forth between different symbols, or if you want, like for example here on the NASDAQ, we can double click on this, and I can pop this out, and I have a subchart or another chart that I can put on a different monitor, okay, of the NASDAQ. Okay, if I close that down, it'll pop back in here at the end of my line, and I can left click, hold, and drag that back into place over here. All right. And then, if you want, for example, let's look at the ES, and let's throw the NASDAQ on there. Okay, we have all sorts of, and let's take the candles off for now. And let's put on the correlation tracker. Okay. And I'm going to add a correlation of, yeah, let's put the NASDAQ on. What the heck? Okay. Whoops, and I need to enable it here. Okay, it's going to be a blue line. And I need to turn on my indicators. Okay. And where's my NASDAQ? Okay, what else am I doing here? It should do it. It should do the trick. Okay. All right, I don't know what I'm doing wrong here, but anyway, Let's try that one more time with that correlation. Okay. Okay, I don't know what I'm doing wrong. I don't know why it's not showing up. Anyway, the correlations do exist, and you can. This comes with the advanced features, and that's part of the package that you get. So that is part of the advanced subscription that you get. Okay, and you can see these numbers here. These little numbers here is another one. It's another add-on indicator, which is the iceberg detector, showing liquidity that traded that wasn't displayed in the limit order book at that moment. So that's another one, and the ability to trade right on the chart too is another nice one. Okay. Okay, so now you can see how we read this here, and we can see the move here to the downside, it's giving us we read this pretty nicely. Looking for a pullback into some of these areas, and then looking for that continuation to the downside. Now here's my Nasdaq right here. Okay, it's showing up, but that is odd. I don't know why. That's funny. Okay, well, it's on there somewhere, but maybe I triggered something wrong. Anyway, let me know if you have any questions. Other than that, we can see you over in the advanced webinar, and let's see, Joan, we'll get you up and running here. I let the guys in support know already, so they should be helping you already. Okay. Okay. Yeah, you're welcome. Okay. Well, thanks for coming. We will catch up with you guys tomorrow. Okay. Bye-bye.